The economy is likely to be a bit weaker than the government's forecasting. That means its tax revenue will likely be a bit less. Also, it's likely to be spending a bit more on new start allowances than it's budgeted. And if you take all that into account, I think a balanced budget is probably the right call for this year, for the coming financial year, and also the year after, rather than the small surpluses that the government's projected.
The Liberal budget handed down for the 2019-2020 financial year saw little change in relation to how Australian investors are taxed. There was no change to the tax rates for superannuation or family trusts or companies that hold passive investments. The only change that we saw was in the personal income tax brackets.
I think people have forgotten about the risks of investing because it has been so easy to make money in the last several years as a result of interest rates coming down a lot. That we need to think a lot more about what our true objectives are, and for many people their objectives are much more focused on trying to avoid large losses and get satisfactory returns than trying to chase past returns and build their portfolios around strategies which have worked in the past but aren't as well suited to an environment which is likely to be much more adverse in the next few years than what we've seen in the last 30 years or so as interest rates have come down.